Hey guys, Marlon here again with another trading video, and this time we're looking at how correlation can affect your trades, and I'll also be looking at some trades that I put on at the same time because I saw the trades, I took them. Yeah, whether they were winners or losers doesn't matter. I took the trades because I get the signal, and that's what I teach my students. However, we have got to take into consideration the correlation because we can either be doubling up or canceling a particular trades. However, you've got some people who actually trade correlation as a strategy, and it works. Now, if you read the book, The Market Wizard by Jack Schweizer, you'll see that there's so many strategies out there that people can actually follow if they understand it well enough to make money. So there's no one strategy. However, for me, I don't use correlation, but I will touch on it a bit. I know it. I'll touch on it a bit, but it's up to you if you want to go and try it out. But I'll share some of the ideas of how you could use correlation to trade as well. But ultimately, for me, this video is about how you could use correlation to reduce your risk and manage your risk, because you don't want to be doubling up or canceling trades while you're in profit. Now, so let's get into this now. Correlation is a relationship between two or more variables, okay? So therefore, we've got this here, which is a positive correlation, and this would be like a moderate. If we had like everything touching the straight line, then that would be like a strong positive. Then we've got a negative correlation going down, then no correlation. Now let's explain now. So as this one is increasing, that one is also increasing. So as this one is getting bigger and bigger and bigger, this one is also getting bigger and bigger and bigger. However, in this case, as this one is getting bigger and bigger and bigger, this one is getting smaller and smaller and smaller. Okay, and this one, there's no relationship between them. Okay, let's show you some example. Let's explain now. Use some examples now. Say for example, right? You're selling, one of those ice cream vans pull up, right? If the temperature is increasing, right? What's going to happen? Ice cream sales is going to increase. So as the temperature increases, so does ice cream sales. Okay, let's look at another one. Yeah, right. You buy a really nice car. It's no vintage, because vintage will increase with age, but it's no vintage. But you buy a nice car. What's happening there? As the number of years increases, what happens? The value of the car will decrease. Okay, and then here now we've got, right, the amount of money I've got in my trading account and the trades that I'm putting on has nothing to do with the money in your account and the trades that you are putting on. Okay, now what they've got here now is the next stage here now is that they said if you think about this now, we've got a strong positive correlation is anything that's above 80%, yeah, and a strong negative correlation is anything below negative 80%. Now I know this can be a challenge in terms of this negative 80%. So let's draw a diagram and show what I mean when I say negative. Now we've got zero, basically no correlation, none whatsoever. Okay, and let's show you now what we mean by this negative 80. Because remember, as I said, you don't need to have any degree or anything to trade. Anybody can trade, but remember, one of the rules we need to get the knowledge though, and that's what I'm imparting here now. So we've got negative 10, negative 20, negative 30, negative 40, negative 50, negative 60, negative 70, negative 80, negative 90, and negative 100. And remember guys, this is in percentage term, okay? So when we say lower than negative 80, we mean everything that's there and below. So it goes all the way down to negative 100. And then, guys, we can see, do the maths here. We get 10, 20, and 30, yeah? And then we go up to 100%, yeah? So it goes from negative, and you know, to convert from percentage to a decimal, what do? We divide by 100. So if I divide this, I get 1. If I divide this, I get negative 1. Yeah, and that's how and this is what we call actually we could call this the coefficient, the correlation coefficient, which is between 1 and negative 1, you know? Okay, but for me, as much as I said, you know, strong positive correlation is plus 80. For me, I'm going to go as low as anything that's above, I would say probably 69% is strong for me. Really strong. You know, anything plus 69. 69 or, okay, and above, then I'm going to say that's strong for me. Okay, and negative 69, that's strong for me. Okay. So anything from 69 and above, or 69 and below, that's strong correlation for me. Okay, guys, now let's look at the correlation coefficient I showed. It showed the strength. Now, this bit here, if you multiply this by 100, you get 50%, negative 50% plus 50%, okay? Now, so as I was saying there earlier, so this is within this section here, from 50%, we're looking at, for me, you know, as I said, we would go up to negative 69, okay? But that's, you know, you want to be wary. Even though it's between here and there, you still want to be wary about those correlation relationship. So we've got the negative correlation and the very strong positive correlation there, okay? But as I said, be wary of this bit, okay? Now, so let's look at two things that are, in this case, they are correlated negatively, okay? So as one is increasing, so look, this one here is increasing, that one there is decreasing, okay? So they are correlated negatively, and that's a strong negative correlation, okay, guys? Now, some people use strategies like this to trade. And say, for example, we say we're going to buy this. So I could say at this point, I'm going to buy above this level. And I'm going to buy, yeah, so if I line this up there, and I buy there, okay? Now, so if the market breaks and hits me above there, okay, then I'm into this trade, and I'm into this trade, okay? But if the market doesn't get me in there, I'm into this one. So this one wouldn't trigger me in because I said buy above this point. And I'm buying this way because I know that they're moving opposite direction. So the fact that I'm buying here and I'm buying there, okay, then what the market will do then, it will trigger me into this one but not this one. So that's one way of trading correlation between currency pair. That's not my strategy, but I wouldn't want to trade this way. However, some people do use it, and as I promised that I was going to show you how you could use correlation to trade. Okay, so this is a good strategy if you're going to buy there and buy there, but then not being triggered in, but triggered into this one. Look at that nice move you would have got. Okay, let's look at another situation now. What if I decide to sell here? So I'm selling here, expecting it to go down. And I'm also buying. I'm expecting to go up. Now, guys, the fact that these two moves in opposite direction, that trade would have been double up because I'm selling, that's it's going down, and I'm buying, that's going up. So what if then, right? Okay, this thing, I sell here, but this thing went up. I buy here, this thing went down. Guys, it will be two trades that I'm losing. Because remember, they move in opposing direction. So then I'll be doubling up on the trade in terms of my losses. Okay. But what then? So what then if I was to sell this one and sell this one? So I've sold there and I sold at some point there. Okay, but I got triggered into both trades. Okay, this one would be going down, that one would be going up, so therefore the trades would cancel each other. Hopefully that makes sense to you. Okay, guys, let's look at another scenario. Okay, this time we have got a situation now, not very strong, but as I told you, I'm looking from anything plus 69%. Okay, this is a positive correlation. So we could say here, as this one is going up, this one is going up. Okay, so they are positively correlated. There not much correlation there, and that's the reason why because this is the latest score I've got. So if you notice there's sort of chopping around there as well, like sideways market type. But anyway, let's get back to this point. Okay, it's going up, right? Okay, so if I buy here, okay, and I buy here, then basically I'm taking the same trade. Look, doubling up. If this thing go down, then I'm losing twice, because both of them travel roughly in the same direction. Okay, now if I was to buy here, okay, so say for example I was to sell this but buy this one, and this one was was going in the opposite direction, then both trades would cancel each other out. So guys, just be mindful when you're thinking about putting on trades that are correlated. Okay, now these are some trades that I put on, okay, at the same time. Now I'm gonna look at the correlation and how they actually play it, but look at this, guys. Also, let me just sort of explain this. Now the Aussie Swiss franc, if I sell, I'm expecting the Aussie to go down. Okay, I'm expecting the New Zealand to go down. I'm expecting the GBP, yeah, in this case, because I'm buying this one, because this is the base currency, yeah. And I'm also expecting the GB to go up. Okay, now we'll look at, I'm going to show diagrams because sometimes people don't really understand this, but so let me use a diagram to explain. Okay, now, so I was in this trade before, and then I put these on after. Okay, now look, this Aussie Swiss franc, okay, yeah, negative correlation. This one, weak, positive correlation. So if this one is going up, that one is going to go up as well. Yeah, because if you look at this region there, yeah, this one, let's look at the latest regions we've got. And the latest region we've got. Okay, guys, now what has happened here is that if this thing is going up, then these two are going to be going down. Now, if I bought these two and I sold this one, then all of them will be doing totally the opposite. And that's the reason why all of these trades were losers for me. Yeah. So if you look at this now, right, the others were winners, but then I end up doubling up on these, which are possible. But fortunately for me, because I was aware of the correlation, for example, I would have gone in and say risk £50 per trade. So I just risked 25 there, 25 there for these two trades. Okay. So therefore, I knew it would have doubled up. So I halved the risk and put both on. Okay. Well, anyway, this one was going up. That one went down. That one went down. And that one was, positive correlation there. So guys, just be mindful, that especially if you're saying you're going to buy this, but then this lot and this lot, you're selling and you're buying this as well. The likely chance is that these will then go in the reverse direction to this lot. So just be careful when putting on your trades, guys. Be careful. Okay, because you're going to end up doubling up, canceling trades. Yeah. Next one. So let's look at some situations now where some currency pairs that I've looked at, and they go in the same direction. So the Euro USD and the New Zealand USD, they tend to go in the same direction. The Euro USD and the GBP USD tend to go in the same direction. The USD Swiss franc, the USD Japan tend to go in the same direction. The Aussie USD and the Euro USD tend to go in the same direction. And the Aussie USD and the GBP USD tend to go in the same direction. Okay, these now go in opposite directions. So this is what we call now the positive correlation. This is what we call negative correlation. Yeah, they tend to go in the opposite direction. Okay, so be mindful of these, and these are the majors really. Okay, now please note that the correlation varies at different times of the year, so it's really important that you check the relationship between the pairs. Now, a really good site is MyFXBook, okay, which I pull off some of the data you're going to see here now. So what I'm going to do now, I'm going to start, and say for example, I've started now, okay? This was a trade I got into, right? For example. Now, I'm looking to see which of these then I'm not going to take with it, okay? Because remember, I'm not using correlation as a trading strategy. I'm using correlation as a means to reduce my risk. That's all I'm using it for, nothing else. So then I realize this is above some, I'm not going to take this one. So this one is out. Okay, so I'm not going to, let's just cross this one out. Okay, I'm not going to do it because I'm already, so I'm not going to do anything New Zealand USD. Okay, which other one? I'm not going to do anything this one. Okay, because it's in the 69 mark, and yeah, it's in near soul number. Okay, so that's it. And also I know I can't take anything this way. Okay, but then with yeah, because that's 100%. This same. Okay, guys, no. So that's it. So I won't take those two. So let's look and see now. So the Euro, GBP. Okay, I can take that one. Okay. Yeah. So I'm just looking. Okay. So that one. Ooh, okay, right. So what I'm looking at now, guys, I'm looking at this one, this one, this one. Okay. So far. Okay, guys. And then I'm also looking at looking to see if there are, so I can take the others. Okay, guys. So what I'm gonna do, I'm just gonna, let's just circle the trades that I could go into then. Okay, so I'm gonna take that one. 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 Take that one. I'm gonna take that one. And that one. Okay. So let's look now. So I said I can take these trades now. Let's see if I can actually. So I've taken now. So what I've done, I've taken the Euro, GBP, right? Because I realized that the Aussie and the Euro, they don't, the correlation between the Aussie and the Euro GBP is 48%, yeah, in terms of positive correlation. So I said, okay, then, right. So I can also take the Euro Jappy. I can also take, I can't take this one. So the GBP is out. So let's take out the GBP. Okay, I'm just going across. Okay, everything else look good. Okay, everything else look good with that one. So let's go again. So I've got the Euro now, Jappy. Let's see which one I can't take. Okay. Okay, because I'm looking for that correlation, guys. So let's see which one I can't take. So I've already got myself out of this one. I'm not taking anything to do with that one. Okay, so that one is gone. So I can take this one. Okay, can take this one because these are not, negatively or positively correlated. They're very weak. Okay. Okay. So I'm gone into this trade now. Okay. And even though the Euro still very weak correlation. Okay. Now let's look. I'm going to look now for the Euro USD. And remember, so far I've kept on with the Aussie, Euro, and the GBP. So let's see how we fare with the others now. So that's Euro GBP is fine. Euro Jappy is fine. Okay, but I can't take this one then if I'm in. So that one is then gone. Can't that one. That's gone. Okay. So right across, I can't take that one. That one is gone. And I can't take that one. That one is gone as well. Okay. So far, if I'm going to take this one here. Okay. Okay, so right. So let's see. GBP, that's gone. Okay. New Zealand, USD, that's gone. USD CAD is gone. USD Swiss franc is gone. And USD Jappy is gone. And so basically, guys, I can use these pairs and probably safe to take them. But guys, what you've got to do is look at the number of trades that you're taking. And remember, you've also got the minus as well. So these are the major currency pairs. Okay. So you've got the minus as well that you can check out. Now, what you've got to do is, watch this video a few times, get a full understanding of what I'm talking about. And to summarize here, guys, we looked at, how people can actually use correlation to trade. We've also looked at how, you'll be doubling up on trades, or one trade cancel the other trade. But ultimately, to understand that correlation ranges from -1 all the way up to 1. And that, anything that's above 6 to 9% or below -6 to 9%, right, is either strong or weak, or strong in one direction, strong in the other direction. But be mindful, guys. Just really focus. Get yourself understanding this thing before putting on too many of the same trade. God bless and good luck. Happy trading.